Alrighty, what is good? I hope everybody is doing well. It is the weekend. It is currently Saturday, 4:44 p.m. I really kind of was just thinking about a couple things this weekend, and I originally was not planning on releasing this model kind of publicly, but kind of in regards to like what I want to provide to people. I always want to provide value and be able to give people some kind of tangible thing to be able to use in their trading without having to pay a price. You know what I mean? So essentially in this video, I'm going to be covering entry model number 2. This, I would say, is probably my most prominent and most widely used entry technique in regards to my trading, my intraday trading, how I use levels, etc., right? So for this, it's pretty simple. It's actually really simple, and I think this is going to resonate with a lot of people because the simplicity of it, it really does not require much thinking, right? So in this beginning part, I kind of just want to establish like a kind of a preface and kind of give an understanding of it before we kind of dig into some examples, because I'm going to be showing you, now I'm going to give you basically my favorite time frame to use it on for intraday, and also I'm just going to show you the beautiful fractality of this model and how powerful it is across all time frames. And it's a super simple thing, like I said. So in essence, what we are doing for this entry technique, and this would be the GB model, that's what it is, GB. I'm not going to say what it stands for because it's kind of like an inside thing, but that is the coin name for it. So essentially all we are doing, kind of similar to my first video when I was talking about the dream model, which is a beautiful entry technique. In regards to CSSs, we are still utilizing those for this entry technique. Super simple process, right? So what we are doing is if we come over here and we draw these boxes. Now this is a very similar start to that dream model video, but it all goes hand in hand, right? So what we are waiting for is we're going to have a validation time frame, right? So for example, if I'm trading 1 minute structure, I'm going to be using the 15 minute as my higher time frame to validate certain areas where I want to engage in price. For example, if I see a 15 minute CSS form, right, I'm going to be measuring that whole move down, and I'm going to be waiting for that retrace up to that valid proper area and want to engage in a short, for example, if it's a short position. So essentially, all we're doing, this is one of the simplest models, and it really comes down to you validating structure on a lower time frame, and we're going to get into that in the examples. So all we're waiting for is a 15 minute, if you're trading the 1 minute, to form. Now, I wouldn't say this is extremely specific time frame wise, but I'm just going to go over several different time frames and give you the gist of it, right? But personally, I would say my favorite time frame to use it on is going to be the 15 minute in pair with 1 minute structures. It's a great alignment. It provides great clarity, and kind of no matter the volatility, right? And a lot of things I say do kind of base around volatility in regards to what time frame I'm using, but this is kind of a good bellwether time frame without having to kind of juggle with too many things. So all we are waiting for, back to the GB model rules, is we're waiting for a higher time frame CSS to form, right? So in this instance, we're just waiting for a 15 minute CSS to form. We're going to get, obviously on that formation, we're going to get a close below this low. It's important, right? We need a close above, a close below. We're going to get some highs, some lows, some highs, some lows. And I am simply, and all this is, like I said, it is one of the easiest entry models, but it is one of the most accurate entry models, especially when you're onside with structure, right? I'm going to show you some really, really cool stuff. So all we are waiting for is a retrace up to this area, right? Why? You'll see in a moment. If we measure over here, and I'll go over these fib levels really quick, right? Let me drag this up here. Boom, boom, boom. I'll go over these fib levels really quick. So, and I want to note this, because I know there's going to be some people in the comments, there always is, that say this. I did not invent these fib levels. I am simply giving you the rules and how I use this to engage with price. That's all this is. I did not invent the wheel, right? This is just me utilizing several things in Confluence and giving you a rule-based system to follow, right? Just something super simple, super simple. So if we drag this over here, right, we're going to start up here at this top part. This is the 0.79 fib levels, right? This midpoint right here, this white line, arguably the most accurate point, and you'll see that in the review, or in the examples we cover, is the 0.7475, right? Right below this, we have 0.705. Down here, this top line is going to be the -1 standard deviation from this 0.705 level. This down here is going to be 0.295. These right here are going to be fantastic targets. Again, you'll see in examples how sensitive these areas are, especially for retracements or possible reversals outside of your position. So right here, these are the settings right here. It's as simple as that. It is as simple as that. So now with that established, we're going to get in some examples. We're first going to start out on the 15-minute and 1-minute sequence, and we'll go from there. All right, so now we are going over the 15-minute and 1-minute sequence, and right here would be the first example. I do want to delete this really quick and kind of talk about this. So look at the bottom left pocket. Oh, you can't see that. Let me pop it up to the top, right up here. We're going to go over here. Okay, go back over here. So on the top left up here, what do we note? So immediately, right, looking at this structure right here, what do we have? On the 15-minute, you can see this is the 15-minute right up here. What do we have right here? We have a close below. Let me fix this really quick because this is going to drive me crazy. We have a close below. We have a close above. Okay, we have our 15-minute CSS. Super simple process. That's all we're looking for right there. So with that established, we can go ahead and delete those lines. Now, simply, all we are doing is measuring that CSS low up to whatever high we establish before we start the retracement back into the range, okay? Simple as that. Now, when I say validate structure, what do we have right here on the 1-minute, right? We have a new high, an internal high, closed above, indicating that the next draw on price should be what? Up to this high. So with those areas and fib levels that I gave you in the beginning, where are we looking to get an entry, right? Ideally, we are wanting to get an entry at this white line. Sometimes it's codependent. Sometimes I will take it at the top line, but more times than not, this midpoint is going to be the accurate point that you want to engage in. It's really dependent on kind of your risk tolerance and kind of how you want to go about it, right? Because obviously if you're taking it at this top line right up here, this would be a 1-to-1 from this line up to this line. But down here, just that little adjustment lower, that gives you a 1.3 or 1.4 essentially, right? So like I said, right, we have our validated structure. We have the 15-minute CSS. We have that retracement leg back down to this area without even having to think about entry function. We are placing a limit at these lines, right? Our analysis is already done, right? Our entry, in my opinion, your entry should be one of the simplest things, right? It shouldn't be something that you spend a bunch of time analyzing and overanalyzing, because that leads you to what? Not engaging with the position because you're unsure, right? This completely removes the thought process of what? Your entry function. You already have it established. It's these fib lines. It's as simple as that. You're just validating a couple things and waiting for that retracement. You just got to stay patient for it. That's all it is. It's nothing beyond that. Now, let's look at these exit levels, right? Like what I was talking about, accurate points for retracements, reversals. It essentially allows you to get out of the position before that retracement happens, where you could possibly do what? Add in another position, right? If we look at this first tap, boom, shoots a candle down. We come back and mitigate this volume imbalance. We're trading up higher. We come tap what? That 295. That does what? It sends a retracement back down here. Coincidentally, if we look at our 1-minute, what do we have? Or our 15-minute up here, what do we have? Right? Let's go ahead and delete these. We have a what? 15-minute CSS. Close below, close above. Now, would this be my favorite structure to anchor off of? Personally, iffy. And I only say that because this is internal structure. This is just price engineering internal structure to draw where? To that predetermined likely draw on price, right? Price should be coming up and putting in a new high. So if we look at this one on an internal basis, this is going to be really good on a lower time frame, right? And if we go down to a lower time frame, you'll be able to see what I'm talking about. And this will likely be an example that we'll talk about maybe on like per se, like the 1 minute and 15 seconds, somewhere around there, right? So look at this. On that same sequence, it can be, I don't think y'all realize how simple trading can be. You don't need crazy analysis. In this, all you're doing is identifying a high time frame CSS, measuring the move, getting a fib, and entering. That, and I'll tell you, the win rate when you're on side with the market, extremely high, extremely. I'm telling you, this is one of those models that I personally wanted to gatekeep, like the kind of rules that I go about it to give it that higher win rate. But I figured, why not? Why not share it? Why not? So for this one, if we were wanting to take this, where do we get our entry? White line. Where can we target? That line, or the highs, right? Look at this. Come up here, consolidate. Trade up above it, come back. Look what we pivot off of. That line. Think that's random? It's not. Hate to break it to you, but it's not. Not at all. Now we're gonna do one more 15-minute, 1 minute example, and then we're gonna get into some other time frames. So this was actually, I believe, where was it? Yeah, this was like right at market open, I believe. And this just shows you right when we gotta get a volatility injection, how beautiful this is. So if we go over here, right? Ooh, this is a really good example because I want to talk about this because this is, I think, the more important aspect in regards to explaining this and teaching you why certain things aren't valid. So if we look at this, because I know some people are going to be like, well, don't we have a 15-minute CSS right here to the downside? Yes, but when I say validate structure, what do we not have here? Okay, we have obviously the 15-minute CSS right up here. Sorry about that. Let me zoom in over here. Right here, we have a 15-minute CSS short. We have that close above. We have a close below. What do we not have on the lower time frame? Valid structure. Why? What are we coming to rebalance? This, right over here. Is this bearish at all? No. All this is doing is retracing back to this swing to mitigate the 50%, our pocket of structure, before doing what? Putting in a new high, right? This is why it's important to mark out your highs and lows. It's a very important aspect, and it keeps you on side with the market. It's so simple, but it's so overlooked, right? That's what I mean. Validate your structure. Validate your structure. Very important aspect. Very important aspect. So now, if we look at this, like I was talking about a second ago, this is the one, this is the last one we'll do for the 15-minute and 1 minute sequence. So over here, what do we have, right? We have our close below or close above on this candle, this 8 o'clock candle right here. You should be able to see it. So with that established, what's our next step? What are we doing? We are validating our what? Lower time frame structure. What do we have? A new high put in. Simple, but powerful. A new high put in indicating what? This low down here should be protected, right? We should not come down and violate this, allowing us to do what? Measure this leg, okay? What do we see right here? Price trades back to where? That white line. What can we do? Place a limit, get long, and this is right at market open, where people think there's no edge. There's edge. There is. What do we see? Dip down, 1 point of drawdown, immediate TP, right at that line right up there. Telling you, does not have to be complicated. It's as simple as that. Market structure is all you need. Market structure, validating with some validation time frame sequences or whatever, and some fibs, you're cooking. You're cooking. Simple as that. Simple. All right, so now we're going to get into some other time frames, just so I can show you the fractality of this. But like I did say, the 15-minute and the 1 minute is my favorite sequence. That's what I utilize this on for intraday. It just allows kind of that peace of mind. It's not too fast. It's not too slow. It's a good intermedium. Okay. So now we're going to get to some other examples and I will talk to y'all then. All right. So now we're going to be going over 1 minute and 15-second sequence. Okay. So with this same thought process as before, what are we doing? We're having finding our what? Our validation time frame, then, which is going to be the 1 minute in this instance, then what are we going to do? We're going to validate our structure on the lower time frame and then measure the move, get our fib, place an entry. Simple, right? So if we look at this over here, this 1 minute, what do we have? We have a close above, we have a close below. Okay, so we have that validated. So that's going to be our anchor point. That's the main premise with the CSS, because one of the biggest issues that people run into with fibs is they don't know what high or low to anchor off of. That's what the CSS is in this instance used for. On your higher time frame, once you identify that CSS and you start to measure that move, that displacement leg, once we kind of start to retrace back up into the range, when you can get the total range, right? That's what the CSS is used for. It removes essentially the questionable area. And you ask yourself, like, is this the correct area? Am I anchoring off the correct area? I don't know if this is the correct area. That's what the CSS is used for. It just removes that even thought, right? You find your validated area on your higher time frame. That's your anchor point, right? So if we go down here, what do we see? Right, we have that close below, or close above, close below. On the lower time frame, what do we see? We have a close below this low. This indicates what? We have established a new low. We got a clean body closure. This high up here should now remain intact. So what can we do? We can measure this total range, get our fib area, enter where? White line. Where can we target? Here. Down to this line, down to this line. Where do we have a retracement? We come down, trade through this line, trade back up, retracement. Come back and mitigate some stuff here, trade and put in a new low. And you'll notice a lot of times, and I hope you already notice it, with these, they're so accurate that in most cases, depending what kind of trader you are, you could either let this breathe, or in most cases, what you're gonna see is that immediate rejection from this area. Likely what you're going to see on your lower time frame is some sort of CSS or some sort of lower time frame structure form that will allow you to mitigate risk, right? So once we get like a close, I would say a close below probably this low right around here, which would be technically we get a close there. It's a really shallow close, but I probably would have waited until we had this closure over here. You can mitigate risk. Instead of being at that high, it can be at this high right here. Super simple process, okay? Super simple process. So there is a 1 minute and 15-second example, and I really want y'all to go back and back test this, the people that are watching this and want to implement this, so your brain can see it, right? I'm just giving you the rules and the baseline for this, but I really want you to put the time in to go back test this and go look at it and analyze it and see it for yourself. That's where the most learning is going to happen, right? That's an important thing to know. Okay, so let's look at this right over here. This is a good one, I would say, in terms of why it's important to validate your lower time frame structure. So this right here, what do we have? We have a close above. We have a close below. What do we not have on a lower time frame? What do we not do? We do not close and establish a new low. We wick this low, indicating what? This is a weak high. Not valid, not something we would engage in, right? You just having those simple processes allows you to engage in high probable trades. It's so simple. It's so simple. I'm telling you. I would say, in terms of, like I said in the beginning of the video, this is like my bellwether, I would say, is a proper word, my most favored thing to utilize. All of my higher time frame levels are based off this, are all based off this. So now we're going to go ahead and talk about, I really want to go up to a super high time frame and kind of show you it for the people that like the higher time frames, because I know some people don't like the 1 minute or obviously the second chart. So we'll go over some examples on a higher time frame and talk about it. All right, so now I am on the hourly chart for my validation time frame and the 15-minute chart just to validate some structure. Obviously, like you could get crazy and go down to like the 5 or something, but I kind of like the sequences that I talked about in this video. I would probably go along with those if I'm being honest. So along the same premise as we were doing before, what are we doing, right? We're identifying our higher time frame CSS for our what? Our anchor, right? That's where we're going to be anchoring off of. It removes that thought process of that, okay? So from there, what are we doing? All we are simply doing is validating our lower time frame structure to allow us to do what? Know we're engaging in valid structure, first and foremost, and that we are on the high probable side of the market, okay? So with this established, what do we have? We have this low, we have retraced back up into here, and we have done what? We have closed below this low, indicating that more than likely, if this bearish trend is wanting to continue in current price movement, where are we likely to go? Put in a new low right down here at 69450, okay? So with those two things noted, right? We have our CSS and we have our validated structure on the lower time frame. We can measure this area from our CSS high down to the low established before we start to retrace back up here. Where can we take an entry? Midpoint, stop at the high, and look at this, right over here. You can either take it here, or you could take it down to this low. Look at these retraces right at these lows, right here, or these lines, these fib levels that I gave you for targets. Boom, retrace. Come down, gets a double tap here, pivots off of it, trades away. This is the main reason I have these lines here. These are the base hit targets that are going to allow you to have that higher probability of closing the position at full exit rather than wanting to take fully to a new low, right? Could it be nice and cool to do it? Yes, right? But you still need those logical exit points and price to ensure and allow you to get a good, clean exit in the instance price does not want to put in and establish a new low, okay? It's as simple as that, right? And the reason I say that is because a lot of times people get under the mindset that they need to catch the whole move when you really don't, right? You just need to get your piece of the pie. And that's why, essentially, that I added those lines for that exact reason. Plus, they're super accurate, right? You'll see a lot of times, and I want to go back and actually show this one because this was one of the ones that I took. I believe this is the pre-market trade that I took. Yeah, this is the one on Friday. We're going to go back over to that because I want to show you something really cool. And I use this as a confluence, and you'll see this stuff line up the more you kind of get some more screen time behind this. So if we go back over to this example over here, I want to say I was getting long off of this. Okay, so you're going to see something cool. So if we come up here, right, obviously we have a 15-minute CSS up here, okay? Now, was I really wanting to short this in pre-market? No, because current structure was bullish. But I still had this anchored over here. And you can see this delivers beautifully, right? So having that on my chart, right, I actually ended up doing what? Taking a long. Why? What was current price doing? Establishing new internal highs and lows, right? Higher highs, higher lows. I'm wanting to get onside with what the market's doing now, okay? If I measure this low over here up to this high, now I'm on M and Q because this was a perfect alignment on NQ. But look at this. The 0.79 perfectly aligned with the 0.295. You think that's random? It's not. Look how sensitive that area was right down there. And look what happens. Price explodes, right? So I really just wanted to get this out and just show like the fractal nature of this. And like I said, my favorite time frame to utilize this on is the 15-minute and the 1 minute, especially intraday. It's definitely one of the easiest entry techniques in my opinion. It removes a lot of the blur. in terms of wanting to engage in price, because you have those kind of mechanical aspects of you wanting to engage and not being so strict and kind of so close-minded to the point where you basically overanalyze and scare yourself out of position, because that's the last thing you want to be doing. You want to be giving the market the opportunity to just let probabilities play out on your end, right? Ultimately, that's what trading is. It comes down to risk management and understanding probabilities, right? You're never going to have a 100% win rate. And by all means, this does not have a 100% win rate. I'll tell you that right now. But it does have a very high win rate when you do the stuff that I told you in this video. Now, a couple nuances I like to see. So, for example, if we go over here and measure this area, I want to see, right? I want to see some form of either consolidation resting at these fib levels or some sort of lows, right? I want some liquidity kind of resting there or some form of consolidation in a picture perfect world. If I don't see those, I'm either going to be using or trading with lower risk on it or completely avoiding it. But that's definitely one of the big key confluences that I like to see there. I also, obviously, like I said, we're validating lower time frame structure. That's automatically going to give us a what? A swing. If we're validating low time frame structure properly, we're on-siting ourselves. We already have that zone. All this is doing is giving you a more accurate entry, right? Obviously, you can see we come down, tap to 50, but this gives a better entry if accuracy is something you're wanting to have, okay? Excuse me. But like I said, that's it. It's super simple. And I really hope that some people actually backtest this and implement this because it's a really cool thing. And especially, it's pretty rewarding when you have all the aspects in line and you're patient enough for it to form in the correct sequence, right? So, like I said, it's just something I wanted to give. Like I said, this is is one of the main things I utilize on the charts. Absolutely. I'm always using this for higher time frame levels. I'm using this for intraday levels, for scalping, et cetera, et cetera. Because I post and I'll be honest, some of the entries that I post on Twitter almost look fake, and that's not like an ego thing. It's just a lot of time spent on the charts to be able to find these things and these certain things that line up to allow that, right? And that's what this gives. I'm telling you, your mind will be blown by how accurate this is when you pair everything together. Like I said, I'm really trying to drill that in your head. You can't skip steps here. You can't just go measure every single high and low and measure a fib off of it and poof, magically you're some amazing accurate trader. No, you need these certain aspects to line up. I think the most important thing in trading is having those confirmations and having those confluences line up to allow yourself to just stack the edge and stack the probability on your side to where you're more favored to actually get a clean trade rather than it to go against you. Can it go against you? Absolutely, right? That's just trading. That's just trading. That's what it comes down to. And that's what most people can't just wrap their mind around. It just blows my mind. Blows my mind, right? So I do want to say, if you are looking for, because I feel like, it's quite a bit of information just to give out for free. If you are trading props and you want to use my links, I'll have them down below for Tradeify and TickTick. By all means, I'm not asking you that you need to do it, but if you're buying accounts with them, by all means, I would appreciate if you use the link. But with that being said, I'm going to go ahead and wrap up the video here. I'm probably going to get this posted tonight because I want some people to be able to utilize this coming into next week and just see the people on Twitter utilizing it. And if you do catch a really nice trade with this, make sure to @ me on Twitter and I'll retweet it if it's right. If it's wrong, I'll probably correct you. But with that being said, hope y'all have a blessed weekend and I will talk to y'all on Monday. Peace.